The same way you click this video, as you watch throughout the video, you will realize that so many traders use what they call trading strategies, but they are not strategies. One of the mistakes you will make as a trader is to think that a trading strategy is all about structures and setups, but that is very wrong. And as we dive deeper into this video, you will realize that some of the things that you call trading strategies are not actually strategies, but traps that are meant to keep you unprofitable for years. A good trading strategy that works is far beyond structures and setups. You must understand the game plan and the different mysteries that surrounds the strategy to give you the real flow to trading the market. And the following concepts and strategies that I'm about to teach you in this video will make you profitable forever. That in 10 years from now, you will look back and be grateful you found this video, and if traded properly, you'll be able to double your account, triple your account, and multiply your trading profits in a very short time. But before we get into all of that, give us a like on this video and subscribe to our channel if you are new here. So my tribe soldiers, let's get down into this business. But before we dive into this strategy, we must first of all understand what this strategy is all about and get the foresight and knowledge to be able to use this strategy. Before we enter the chart, the first thing you must understand is that this trading strategy is a liquidity trading strategy, meaning that we are going to be waiting for the market to do the break of structures and taking out of the liquidity zones before we take actions. And if you have watched all of my 3 previous videos on liquidity trading, you would have known all of that by now. The second thing you must note is that the concepts and strategies that I'm about to reveal to you only works on trending markets, meaning that you will be looking out for trades in the uptrends and the downtrends, and we will be ignoring the sideways market. And the third thing is patience. The strategy that we are about to learn takes some game of patience to work for you, as it takes time to form on the chart, and you will need to be patient to wait for the market to form the structures and the setups that I will be explaining right now. So with all that being said, let's start with the illustration of the structure of this strategy. Like I said earlier, this strategy only works in a trending market. So let's imagine we had an uptrending market, forming higher highs and higher lows. And I hope you all know that for the market to keep the uptrend going, it must keep creating higher highs and higher lows, meaning that the market must have to break the last higher high to be called a higher high. If the market comes to this point and did not break the last higher high, it is not qualified to be called a higher high, so therefore it is still considered a lower low. Now, all these means that for the market to keep the price going up, it will have to keep breaking structures. So when the market breaks the last higher high, that act is called a break of structure, as it is continually breaking the resistance of the sellers. But then, something interesting happens after the break of structure. Sometimes it happens immediately after the break of structure, and sometimes after a little price movement after the break of structure. This price movement will appear like a small trending movement, according to the current trend of the market. So for an uptrend, it will make a higher high, a higher low, and then a break of structure. This will look like a small price movement on the chart when compared to the bigger trend move, but it plays a very important role. This is going to serve as our liquidity sweep, and after this small trending movement, we want the market to rise up with much volatility, at least almost the size of the last rally before the break of structure, or more than that. But it must not be a small price movement. And when this has happened, we want to see the market returning to take out the liquidity sweep, which is this little trending price movement here. And right there, after taking out the liquidity, we want to see a momentum candlestick appear, which will now give us the final signal to enter the market. And on seeing it, we enter the market, placing our stop loss below the momentum candlestick and our take profit target at the last higher high. Now, before I go into the chart and show you examples of this strategy at work on real time, let's do a quick overview of the rendition of this strategy in a downtrend, so you all know that the downtrend is the direct opposite of the uptrend. So everything I taught you in an uptrend market will be held in reverse for a downtrend market. So it starts with the market making lower lows and lower highs, meaning that we are in a downtrend market, and after that, you will see the market break the last lower low, causing a break of structure to the downside, and after that, you wait for the market to create a little trending price move. In this case, a downtrending price move, which is a lower low, a lower high, and then a break of the lower low, a small price move, which will now serve as our liquidity sweep. Then we wait for the market to fall with strong volatility, at least the size of the last drop. And then we will wait for the market to return and take out our liquidity sweep, which is this little downtrending price movement here. And after that, we wait to see a bearish momentum candle, and then we can enter a trade, placing our stop loss above the momentum candle and our take profit target at the last lower low. Now, let's take a look at examples of this strategy at work on the chart. Now, here we had the market moving in an uptrend as it was making higher highs and higher lows. Now, notice how the market formed a little trending price movement here. After a break of structure, having a higher high, a higher low and a break of the last higher high, and that becomes our target liquidity sweep. And you can see that after that, the market moved with more volatility to the upside, moving higher than the size of the first rally. And then it returned to take out the liquidity sweep. But as it took out the liquidity sweep, notice how the market formed a momentum candle, which now gives us a go-ahead to enter the market. And then we enter the market, placing our stop loss below the momentum candle and our take profit target at the next high. And here we have it. The trade was a successful one. The take profit target was hit successfully. Now, let's take a look at another example. So here, you can see that the market is moving in a downtrend, as it is making lower lows and lower highs. And after this last breakout, it formed a little trending movement, which in this case is a bearish trend movement, because it also has a lower low, a lower high and another lower low, which will now serve as our liquidity sweep. And after that, it made a strong drop, moving much lower than the last drop before the big break of structure. And then the market returns to take out the liquidity, and when it has done that, it formed a bearish momentum candle, which is our final signal to enter the market. So we enter the market, placing our stop loss above the momentum candlestick and our take profit target at the last lower low. And as you see here, our take profit target was hit successfully. A successful trade we got. Now let me show you another quick example on the chart. Before I tell you the 3 things you must always do to make sure this strategy keeps working for you. So here we have the market moving in an uptrend, and then we have the market break the last higher high, and after the break of structure, see how the market formed a little uptrending price move, which becomes our liquidity sweep. And then the market moved higher with much volatility, moving higher than the last rally before the breakout. And then it returned and took out the liquidity, and after that, it formed a bullish momentum candlestick. So we take the trade, placing our stop loss below the momentum candle and our take profit at the last higher high. And as you can see, our trade was very successful. The take profit target was hit successfully. Now, if you want this strategy to keep working for you, here are 3 things that you must do to make sure you get the best out of the strategy. Number 1, be mindful of the time frame that you are trading this strategy with. The strategy is not to be traded on all time frames. It is best when it is traded within the range of the 4 hours to the 15 minutes time frame. If you want to get the best out of this strategy, do not trade it above the 4 hours time frame or below the 15 minutes time frame, no matter the kind of trader that you are. The second thing you must do for the strategy to work for you is that you must always wait for the right setup to form. If you follow the rules of the setup that I've been telling you, you will not find it difficult identifying the right setups on the chart. But if you are too hasty and hungry to trade, Anything that looks like a setup will also look like an opportunity to you. The market can be tricky sometimes, so you must open your eyes to observe the setup very well, making sure everything aligns with the rules, so that not every shiny thing will look like gold to you. The third one is patience. Patience, patience, I have said it before, and here I am saying it again. This setup takes time to form, so you must have the patience to wait until the final structure is completed before you enter a trade. Trying to enter the market when the structure has not yet swept the liquidity is very wrong, and I will tell you, many structures will work like that. But that does not mean you should depart from your original structures and game plan. Stick to your strategy and never compromise it for any market condition. In this video I taught you my best trading strategy. In the next video that will pop on your screen right now, I will be teaching you on how to make your first $100,000 per month using a very simple trading strategy. See you there, my tribe soldiers.